Good morning and welcome back to the Opportunistic Trader for December 14th, a Friday. Thank God it's Friday, although we're starting to trade a little bit better. We're off 3 winners right now, so we're, I think, 3 and 6 for the month. Trying to get to unchanged on the month today, and we've seen this month before, last month as well, but we ended up being okay. Markets are kind of doing what we had thought they would. Our mantra is that the S&P on Tuesday into Wednesday's Fed announcement will be near the low of the move, if not on the low of the move. So it's only another percent away from here, but that's my view of what's going to happen. And then the way to trade this to make really good money, I think, I've said it before, is to be short S&Ps and short volatility. And volatility is basically where it was yesterday, and the S&P is down $50 over 2 days. So that trade is working out. And what I will tell you is once the Fed goes away into the end of the year, they're going to put a squash on this volatility. I just hope it doesn't get down as low as I think it may. But it's a good hedge for traders as protection against the fact that there's no trading. So inherently, you're leaning short volatility, but you have a short bias in the market just to protect you in case the market does go down. If the market stays flat, volatility will come in. If the market goes up, it'll come in a lot. And if the market goes down, it'll go up. But as we've seen before, when we've made these lows, volatility hasn't had an extension move. So looking at that, that's the trade that really will work. Again, that FXI S&P trade is working finally. Not for the faint of heart. That's our trade for next year. We think that China will outperform the U.S. Overall, the dollar is very, very strong. Euro, I don't know what the low, Mike, was on the euro.
Dollar's the high of the year right now, the dollar index.
Dollar index is the high of the year. What about against the euro? Did we trade lower than 12.5? We may have, but we're right in here on the lows. We're in the lows. The British is at 125. I think it got to 124 the other day, 124 and a half.
We traded below 125. And the euro did trade 2 days back. 30 or so.
Yeah, so we're in here on the lows, and that trend is intact, and the trend followers have control, and they'll probably pound that out till to the end of the year. But there's a lot of interesting stuff going on, and a lot of it is because of this bond and yield curve type scenario. And we're going to have an inverted yield curve again here. Probably, they're going to try 2s to 10s at some point. I think it was 2s to 3s to 5s that that took us down originally. But they're going to try that. And these bank stocks
are about 15 basis points.
Well, if the Fed raises to 2.5 and 2 3/4, the 2-year really has nowhere to go. It can invert to that level, but it's not going to invert much. And the 10-year, depending on how strong this sell-off will be in here and how iffy the economy gets, you're gonna have inversions all over the place. So that's the trade for next year, I guess, is this yield curve trade. You got to be careful because it is a crowded trade, but overall, that looks like a good trade for next year as well. Volatility is up 5% today on an S&P down 23. S&P is trading at 2622. It's going to be an interesting day today. If we get through 2610 again, we could head down through the figure and back to the snapback low at 2583 or 86. Those are levels. I do believe potentially that the low is in jeopardy of the year, which is 2530 or 40 that we made in February. The low is in jeopardy depending on reaction to the Fed. The banks are horrendous. Goldman Sachs is through the low of the year. Citi is on the low of the year. Bank of America, low of the year. These stocks are down 20s and 25s. And, I'm just looking at stocks all over the board. I have so many of them down 20 to 35, 40%. So, there's a lot of pain You know, there's going to be some tax selling coming into year end, and there's going to be a lot of great opportunity moving forward. You know, looking at a little bit of commodities, oil held that low. There was some positive news, I guess, out of the Congress that they believe that the murder was Saudi and they were going to do something. I mean, I don't know. What could be more obvious than that? There's not really a lot out there, you know, as far as.
You know, just following up on your last comment, year to date right now, Goldman Sachs, Citigroup, BlackRock down. Bank. So.
And the numbers actually are a lot worse than that, Mike, because at point during the year, midsummer, these stocks were all up on the year. So yeah, they're down 25, but they're really down 30 potentially from the high. Goldman Sachs traded, I think, I don't know what the high of the year, but it was like in the 260s. I mean, the thing is down 100. You look at Nvidia, it's in half from the highs. What was the high? 250?
Goldman traded 80.
Okay, so 280, it's down 110 points on you know, on a 280. You're talking about a massacre. It's down like 40%. Nvidia is more than in half. The high was 294, and it traded down to 135. That's down like 70%. This all happened in a month and a half, 2 months. So what makes this move more interesting, and I'll give it to you in Apple terms. Apple, if you bought it any time during the year after March, the stock was 180 to 200. So most of the buys are over 200. So now the stock's 168. You're down, you know, 35, 40 points. You're down 25, 30%. Apple is down small on the year, but anywhere you bought it, you're down money. So that's something really to look at. There's a lot of inherent pain all over. I think there are some good buys. I mean, maybe the banking sector is a buy into the Fed for a snapback, but these stocks are pretty much in trouble. And you know, it's funny. I talked about it a bunch of times on the air. Goldman Sachs is 173. When I worked at Spear Leads in 2000, we were bought by Goldman, and the stock was 135. It traded down to 70, but when the deal was done, it was 135, 140. That deal's 20 years old. The stock has not split, and it doesn't give a dividend very much. You've made 30 points in 20 years. So there's no return in that name at all over the last 15 to 20 years. You know, obviously some of the banks are different than that. You know, JP's, you know, held up better than most. But overall, looking across the board, I mean, the SPOO's down 22, but it could go down a lot more. I'm looking at, you know, MU, Micron, year low. Everything that I'm looking at, year low for the most part. Stuff is holding up. Where's the housing index? Did it take another leg lower? I know it was down about 20% for the year.
5%.
Yeah, so that's holding up. So that's an interesting sign. Maybe that's kind of bullish, you know. In general, you know, maybe that you take a clue from that, but that might go down and take the low. But today is an interesting trade. There's a lot of opportunity today. We're looking at today. We're going to look at some options as well. And what I want to do, because I'm starting to see this. I do S&Ps for the most part when I trade, and I give out my trades. It's in S&P. What I'm going to do is I'm going to do it in SPY terms for equity players out there, because it seems to me that more people in our chat and around trade equities more than they trade the futures. So SPY is the exact same thing. We are going to trade it in futures, but we are going to give you the SPY levels as well, so that the equity players in the chat and in our membership will have the ability to get the trades to do equities on, and try to focus a little bit more on on equities here. So that's a little bit of a change, but I think it'll benefit everybody, and it won't change anything as far as doing the futures. And that
Vince,
being,
what's going on this morning?
Not much. Just that's a good idea going from the futures to SPY. If for no other reason, you know, futures exchanges charge data feeds even when you're not trading. Meanwhile, you can get real-time feeds for equity products. So I think a lot of people, in an effort to why pay for a feed for futures? I think a lot of active uh, day traders look at when they can get a real-time feed. Uh, the business model of futures exchanges is to charge for data, whereas the business model for equity exchanges is to give data away for free to entice people to trade more. So I think that's one of the reasons why it's probably a smart move to go with an equity-based product as opposed to futures. On the other hand, if you're actually trading, you're going to get more leverage with futures and more flexibility, and sometimes even more liquidity. But price terminology is what matters, I think, the most for people. Other than that, I see gold down, breaking a signal that I got yesterday, but chickened out on. But
it was shorted, I thought, during the day yesterday.
I did short it, and I covered because only one position at a time, because I thought I saw a better signal on the S&P, which turned out to not be. In fact, I think I was shorting as you were buying. But the gold signal was
And we
was
both
a
made money. That's all. That's the great thing about it.
well, that's the classic. I'm trading momentum, and you're trading regression to the mean. But the thing with gold, I think, is it was a 16-hour trade, and I don't want to take it home overnight, but I should have. Uh, uh, as you know, I mean, I'm not. It's not that I'm not. Uh, I don't want to take things home overnight, but at the end of the year, I'm just with all the trade stuff going on. Meanwhile, it's trading a lot lower on a weekly basis. It's still I'm still friendly to it, but uh, I don't like it at all going into the end of the year. I don't see allocations coming in for it, and the dollar is stronger, and there will be no government shutdown. If there is, it won't affect things like gold. Reasons to buy gold are not uh, 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 self-sustaining. So right now, I would say below 1250, you should be short. Kind of that simple.
It's funny. Gold's been like a no. It seems like a no. I mean, there's been movement, and you can trade it. Don't get me wrong, but it seems like it's almost like a no trade. If you, I mean, the S&P is rock and roll every day. You know, percents.
Right.
You know, and gold on a relative basis has been between that low that night. You know, tried to test it a couple of times, never even got close. But it's really been above 1200 and below like 1270 for the entire 6 months. So, you know,
Well,
it's been
the
kind
more
of.
gold becomes money as it becomes remonetized, the lower the volatility gets, and I think that's what we're looking at here. Doesn't mean it won't have big moves, but more lending itself to
I,
gaps.
I want to ask a
Uh,
question, and you may not know the answer off the top of your head, but I'm going
mhm.
to ask you, what is the value of the amount of gold in contract value? Is it hundreds of billions? Is it trillions? Like what is
You
the
can corner the gold market with $1 trillion. Meanwhile, $1 trillion in bonds trades daily. But in terms of all the above ground gold in the world, the common physical gold is the actual gold in the world. It's kind of like fractional reserve banking. If there's 1 ounce of gold in the world, there's 10 ounces of futures that trade around it. So now, I don't know if that answers your
Well,
question
no,
in
I was
broad
just
sense.
wondering, is it 500 billion? Is it a trillion? Is it, like, I'm just curious, just because Mike and I were looking yesterday at Bitcoin, and
Mhm.
it's around the contract lows, not lows of all time, but the contract lows over the last
Right.
year or two, year and a half, when they fleeced everybody and took it from 800 up to 19,000 back to 3,000. But the whole market cap of all the ICOs, and they're all going down. And
Right.
we've had people on the air basically saying that there will be nothing to any of these coins other maybe two or three. So if it really ends up being two or three, if you look at the market cap of the top two or three, which is 80% or more of the coin value, you're looking at 80 billion. 80
Right.
billion is
No,
barely
it's tiny. It's tiny.
right, that's what I'm saying, but 80 billion is the market cap of basically GE, which is the most broken stock on the board. That's just one stock, you know.
Right.
It's amazing to me how small that market is and how it could never be what gold is or ever be what a currency is to utilize. It will never be that. It just doesn't have, the interest.
Well,
I
it's very
mean,
limited. I mean, in terms of it is, if gold is attractive to people who want stable money because it's limited, well, Bitcoin's even more limited. So that's why the price kept going up, because there aren't as many. But when they listed it as futures, now you have 10 people who can sell futures against, one Bitcoin. So the $80 billion product probably has, a trillion or $500 billion in futures against it now. But to your point, something with such a small float would be like the currency of a tiny, tiny, tiny country.
not
To look,
even. I don't even see it being anything like that. That's why looking at it, it's like they pulled the wool over the public's eyes because they made a market, and listen, the market at 100 billion or whatever it is really big because that market wasn't even a billion. 3 years ago. It was a fraud. It was, it was invented by some guy in his basement, whatever. And it's an amazing thing that if you look at the peak, it was like a $700 billion situation. There's been about 500 to 600 billion dollars this year taken out of that market to make it only $100 billion market. But
right.
but no, I was just wondering because they were like, oh, it's going to replace gold, it's going to do this, it's going to do
No,
that.
no,
It's not a
I
chance.
understand why you'd say that. Two of the aspects of Bitcoin that people were touting were one, it's a store of wealth, which is, I did an interview about that. And I think I posted it recently. In 2017, I did an interview at the end of the year. It basically said gold is not, Bitcoin can't replace gold as a store of wealth because it's too volatile. Number one. Number two, it can't be a currency or as a medium of exchange until it's more broadly accepted. And it wasn't broadly accepted enough. So, in that sense, it was a bubble. The other thing I think that's very important is that when, as it was beginning to be more broadly accepted, it became listed. And that was within a month of the peak of the market. And listing enables short selling. You couldn't short sell physical Bitcoin. Now you can. So now the market price is probably reflecting what its real worth is, for better or worse. So there you have it. I mean, it's not a store of wealth. It's a way to create or destroy wealth recently, and it's not a currency, so it's not a replacement for say PayPal as a medium of transfer. But the technology is real, and it will resurface or be used by government uh, uh, bit government coins because of the double the multiple ledger accounting aspects of it.
Shifting the conversation slightly, we have a question from Sunil asking, question for Larry. Do you see any clues? Do you see any clues for correlation between S&P and crude today? Crude oil didn't really react to the China news overnight.
No, I think they're sort of decoupled, and yesterday was a prime example. It was interesting if you were using that correlation yesterday. Crude was ticking up as we kept ticking down, and maybe they had that fake news about Congress blaming blaming the Saudis. But I wouldn't use that today as a correlation. There's a lot of breakdown in correlation. There's a breakdown in correlation today. To get off the oil, we can come back to that in a second. But the DAX is performing well, believe it or not, over the last couple of days. And I think, Mike, you were pointing out one of these indexes is up a couple of percent for the week, and we're getting hammered. I think it's the DAX. So you got to be careful on these correlation trades. I think the bigger, broader picture is maybe it's dollar related. Strength in the dollar is causing weakness here, so keep an eye on the dollar. But as far as oil goes, I think it's gotten basted so hard that it's hard to utilize it as a correlation to the S&P. It's funny because if you were trading S&Ps yesterday, which you probably were, and everyone in the chat is looking at that stuff, the S&P had a hard time breaking yesterday, and they had a lot of negative. We were like looking around. The Russell was down 1%, and the S&P was green. The only thing that makes me a little leery today on the short side in S&P is you're not getting any follow through Europe. Asia was weak, but I really, I look at today. I would look at Europe, and I would look at the dollar more than I would look at oil. But oil, relative strength wise, probably looks strong and probably will rally if the S&P rallies. So, I hope I answered the question. I'm not utilizing crude, but I do think could be an opposite today, where if the S&P does rally, that may get stronger, and it's more news related at this point, and it's also oversold.
To follow up on what Larry was just referencing about what I was saying, prior to today, Hang Seng was down 1.6% overnight, and that takes it month to date down, basically dead flat overnight, month to date. Whereas Russell right now, month to date, is down 6%, 6+%, and S&P is down 3%. So U.S. was actually underperforming for the first time in a long time versus the rest of the world, China, Hang Seng, even Nikkei. And
I really like that trade for next year, actually. You're not going to see a lot in it towards year end. We keep saying it. How many actual trading days do we have to the end of the year? Pull up a calendar. Going to take Christmas out.
We're looking at 9 or 10. It depends even on what you say. The last day, December 31st, I believe, is a half day. Nobody's going to that, so that's a Monday.
And
so,
I think the day
we're
before
really
Christmas.
Looking at like 8 days.
Right, so there's no more time
7
left.
days. And
right.
That's why I really think after the Fed, basically, it's going to be really quiet. And like you said, that's when potentially that trade you're talking about of selling VIX, the VIX should probably start to melt lower just because of lack of activity.
I think you could sell VIX now, okay, and stay short. And I would do it weighted now because we've come in a lot, so I wouldn't be as short S&Ps as I would volatility. And but I will say that they're trying everything they can try to have the Fed not raise rates. So you got to keep that in mind while you're putting this trade on. It'll be interesting to see if the Fed actually, if we keep getting iffy. What is the S&P down on the month? 3, 4? I don't know. We're looking. That
prior to today was 3%, and we're down about 3/4.
Yeah, so 3.5. All of a sudden we slip a little more. It's 4, 5. That becomes iffy on a bad year. So I think that they're trying to do that.
I'm sorry. After we're down 4. Well, right now we're down 4.6.
Oh, that's even more. Okay, so yeah, so it's pretty bad out there after a bad year. It would be interesting to see how hedgies are doing in this year. And
I think as a whole, similar theme that we've been talking about for a few weeks, it's really been a very, very difficult environment for almost every single strategy, whether you be equity, global equity, emerging market equity, sector-specific equity. Trend followers aren't doing well. Take a look at commodity markets aren't doing well. Energy markets, gold. Dollars actually traded pretty well this year. But if you take a look at the beginning of the year, we started euro was around 125, and most people were short dollars. So that hasn't been that great of a trade. Then you look at high yield growth, a lot of different strategies. The classic long only crypto strategy hasn't really fared well.
Is that a strategy?
Yeah, man.
Listen, if you're a huge hedge fund in crypto, you probably have $100 million under management. How could you have more?
Well, you say that. There's actually a Bloomberg article which I'm going to post with Mike Novogratz, who has fully embraced the long only strategy of.
He knows a lot about that. He's been in the market for a year.
He's still very bullish. He thinks that there's still great opportunity out there, similar to a lot of people. Look, the crypto bulls are not.
I understand, but he is a public company, and his stock was $19. It's now 70 cents. Okay, so it's good night. Okay, it was $19.79 when it started, and now it's 79 cents. What does that tell you? tells me that he's not really an expert. So that being said, you know, we have
The
to.
tropical rainforest is dropping out Larry's voice a little bit.
What was that? Hello? We off the air?
No, we're on.
Vince, are you there? Vince is out. Anyway, yeah, you know, listen, crypto might come back. You know, if you say every day, listen, if you say every day you're buying Apple, eventually, you know, at least Apple's real, but you'll be right. Bringing up Apple, it actually relatively looks strong. The low, it's about $5-6 off the low here. Sneaky. I guess it's a level. It kind of looks in a way like Facebook. When Facebook got down to 130, it's now 143. It's nowhere near the low. Apple is off the low. It's going to be interesting to see today. It looks like they want to buy them, so I'm not really overly bearish, but I want to see through the opening if the market could hold up. Here it's down 19, and it feels like since we've been on the air, we haven't even moved 2 S&P points. So today is going to be interesting. There's a lot of divergences. I think the strong dollar is a problem, but you know, right now looking at the DAX, it's almost on the highs of the day. It's 150 points off the low of the day. So I'm expecting a little bit of a rally off the opening. You know, we're going to look to buy here. And overall, you know, stocks are down 1% to 2% across the board. Keep an eye on the banks today. That'll be critical. This bond trade is literally hammering people. I think, you know, people are wounded. And I think Dunlock is coming on Monday, not on to the Opportunistic Trader, but on TV to talk about his view, which, you know, obviously I don't understand. He said bonds are overvalued and stocks are, you know, in big trouble, all of this. So it'll be interesting to hear his thoughts. But overall, markets are down a bit. Trends intact in bonds. And
What sort of levels
dollars.
are you looking at today for S&P for possible trades?
No, I like this level as a long against 20, but I'm going to wait for the stocks to open. I'm not, you know, I came in short. I got a good move. I'm happy, but I'm not overly. I do think we're going to go down to those levels by next Wednesday, but I don't see anything today that's getting me crazy bearish. Hopefully we do go down to create a little bit more opportunity. But there were so many divergences. The Nikkei acted really well early in the week and just got smashed over the last 2 days back to 21,003. It got up to 21,008 early in the week, so it's gotten hit. You know, looking at my board, the bonds are the outlier. They're the ones that are making me a little bit afraid. Why have they been buying those every single day? And then, ironically, I haven't looked at this in a while, but Nat Gas is broken again. They blew that guy to smithereens up to $5. It's now trading $3.90. And I think the back month contracts are like in the 2s. So that was just a squeeze to blow that guy out or blow people out that were short. That trade is over. And other than that, I don't see much, and I'm just going to get ready for the opening. Keep an eye on Goldman Sachs. The banks are important today to give a clue, and obviously technology. But the tech is well off the low. Apple is not in jeopardy of taking the low of the move out today. Obviously, Facebook is 13 off the low. Netflix is 20 off the low. So these stocks are well off the lows. We'll keep an eye on that. But other than that, I think I'm going to look to options today. We could look at the straddle. Look at the straddle around. Straddle is only $22, so there's not a lot in that. And that's what I see here today. We'll be back to you guys after the opening. I'll be on after 9:30 to re-update the market, but S&P down 18.5, not really moving. Usually when we're on the air for half an hour to 45 minutes, the S&P has a 10 minimum range. We've moved $2 or $3, so it's very quiet there, and I don't see much of a clue. So We'll be back to you after the opening. I wish everybody good luck today, and everybody have a good day and a good weekend as well.